Hi, good morning all, and thank you so much for joining today's exclusive webinar on NPS. My name is Ashish Asthana, and along with me we have our product specialist from NPS, Mr. Dheeraj Shetty with us. So today, as per again demand of the customer and the recent changes that has been done in NPS, so we have kept this session. We will be definitely taking more of questions, right? So before we proceed further, let me quickly have a quick poll. I would post a poll. Are you aware about NPS or no? Right now, the participants who are watching right now, please let us know. Are you aware about NPS? Have you ever heard about NPS before? So the poll is on your screen now. This will be on for next 20 seconds. So let's see whether what are the knowledge levels of our participants. Absolutely. Great. So most of them have heard. I'll just close the poll because polling is already done, and here are the results. So almost everybody, all the investors who are watching right now, they have heard about NPS. That's new. That's National Pension Scheme, right? It is available. All of you are aware. Good to know that. Now I have a next quick poll for you all. Are you aware that you get additional tax benefit? Are you aware about this? That you also get some additional tax benefit, not as a regular ATC. So are you aware that you get additional tax benefit? Let's see what are the polling results. So again, in next 10 seconds, I will close this poll. Okay, and here are the results. So about 50% customers say yes, they are aware, and still, but massive 50% customers are unaware about the additional tax benefit. So here, let me inform that when you do investments under section ATC, the bracket of ATC is about 1,50,000. So if your investment becomes more than 1,50,000 under ATC products, you will not get any additional benefit. It is only limited up to 1,50,000. It consists of your provident fund, which the PF that been deducted by the employer, and your contribution, that also parts it's a part of ATC. Then your insurance policy premiums that you show, that also come under the ATC. The fantastic product ELSS mutual fund, that also comes under ATC. But the sum total of the bracket total is 1,50,000. But if you invest in NPS as an individual, additional up to 50,000 you can claim in tax exemption as well. So that is what I was talking about, that additional credit which you will be getting. So if you do, that is why NPS, it becomes a must product. Why? Number one, it is your financial safety for your retirement. It's a retirement tool. Number two, whatever amount that you would be investing, you will be getting additional tax benefit. So to motivate this thought process, that is the reason government have given, finance minister have given that additional 50%, that additional 50,000 amount, that if you invest, that would be taken care as an exemption from your taxable salary. So that's the beauty of this product, and it is definitely one of the interesting product, and everyone should have in current scenario. Right. So now over to Dheeraj. Dheeraj, please let our investors know about NPS. How does NPS works? What are the various different contribution happens? See, because at times understanding the product is simple. I got to know that, okay, it is a national pension scheme wherein I have to invest every month a certain amount. That would, now what is that certain amount? What is the minimum amount? This will be our customer's question. Absolutely. Then what happens after that? I will get tax exemption, but what happens in the contribution? What happens of the amount that I invest? How much I can withdraw? When I can withdraw? I guess these will be the questions, right? So over to you, Dheeraj.
Yeah. So good morning, everyone. To start with, NPS, which is National Pension System or National Pension Scheme, it's a Government of India product which was introduced in 1st January 2004 by the Government of India. So when it was introduced, it was only for state government and central government employees. Later it was shifted to PFRDA to regulate NPS. So PFRDA, which is Pension Fund Regulatory and Development Authority of India, they brought in an all citizen model in 2009 May. So what happened in an all citizen model was each and every Indian citizen who is aging between 18 to 65 is eligible to open an NPS account. So I'll come again, 18 to 65 is the age bracket. So anyone between 18 to 65 and is an Indian citizen is eligible to open an NPS account. So as Ashish duly mentioned, the beautification of NPS is the tax benefits that it offers. So I would like to show that slide to our viewers.
Sure. So over to our computer screen now. Yeah. Here we go. And and I will simply switch off the cam so that there can be a full view.
Yeah, so this slide talks about the beautification of NPS, the tax benefits that an subscriber or an employee enjoys under NPS. So the first slide talks about contribution by individual or employee on his voluntary part. So here what happens is, as an individual subscriber, an employee or a subscriber gets an opportunity to invest, gets an opportunity of tax benefit up to 50,000 rupees under section 80CCD 1B, which is over and above the ATC limit that we have. So that's the uniqueness or the beautification that NPS offers you. You can invest into NPS and gain up to a tax benefit of 50,000 rupees under the voluntary system or under the voluntary individual pension scheme.
So this is the benefit is up to 50,000. It's not like that you have to invest up to 50,000.
Absolutely.
Your investment
Absolutely.
can be more than 50,000 also.
Absolutely.
If you wish, you can do that. But the claiming benefit which you can, the tax benefit that you can claim for is up to 50,000.
Yeah. So this is the only investment or retirement investment product in the market which gives you tax benefits over and above the ATC limit. So that's the first part. Second is the contribution by the employer through his employee side. Now here what happens is, as an employee or as a subscriber into NPS, you get the opportunity to invest up to 10% of your basic salary, and whatever is the basic salary, the maximum is 10% that you can invest, and the same amount that you have invested in a financial year would get exempted from your taxable salary under section 80CCD 2. Here the best part is there is no upper capping on the amount. So for example, if your basic salary is supposedly 10 lakhs and if you invest the entire 10% of that, so 1 lakh is the amount that you have invested in a financial year, and that same 1 lakh gets exempted from your taxable salary over and above the ATC limit. Here there is no, I'll come again, there is no upper capping on the amount. So your basic salary can be as much as it can be 10 lakhs, 20 lakhs, 30 lakhs. The maximum that you can put is 10%, and you enjoy the same tax benefits which is over and above the ATC limit. So both these tax benefit, as an individual or as a corporate account holder, you can enjoy both these tax benefits. So 1,50,000 is the normal ATC tax benefit that we get, plus additional 50,000 if you are doing a voluntary contribution into NPS, plus if you're doing it from your employer side, you can enjoy additional tax benefits depending upon your basic salary. So coming to the next slide talks about the types of accounts that we have in NPS. So NPS gives you two types of accounts, a tier 1 account and a tier 2 account. Now the major difference or the major difference and the uniqueness between two of these is, any individual or subscriber who enrolls himself into NPS, that tier 1 accounts would get opened mandatorily. Tier 1 is a mandate account that would get open. Tier 2 or tier 2 is a voluntary account that would get open. It's an add-on, basically it's an add-on account. The basic difference between both of them are the tax benefits. The tax benefits that we spoke in the previous slides are only attached in tier 1. Tier 2, there are no tax benefits attached. So the contributions made in tier 1 can be a mix of both your employer and employee, or either employer or only employee. But when it comes to tier 2, it's only employee who makes the contributions into it. Again, withdrawal facilities. So in tier 2, there are no withdrawal facilities attached. You can invest anytime, you can withdraw anytime. So if you open a tier 2 account as well, and if you feel that the funds are performing very well, you can invest today and you can withdraw tomorrow itself. There is no restrictions. However, when it comes to tier 1, there are some withdrawal facilities attached to it. Minimum contribution to open an NPS account in tier 1 is 500. In tier 2, it is 1,000. Minimum subsequent contribution to do in tier 1 is 500. In tier 2, it is 250. You at least need to invest 1,000 in a financial year to keep your NPS tier 1 accounts active. Tier 2, there is no such restrictions. The minimum number of contribution is once in a financial year. In both the accounts, you at least need to invest once, the minimum amount being 500 in both the cases, and the maximum frequency is unlimited. You can invest as many times as you want to into NPS. Again, in tier 1, the minimum is 500. and the maximum, there is no limit. You can invest as much as you want.
Right. So it's like tier one mandatorily, because it is the purpose of this account is to for future securing the future, or you can say wherein we are looking out that we should get some regular income when we come at the old age, because now there is no additional income that we are getting.
Absolutely.
Right?
Absolutely.
And by that time you would also not be working.
Hmm.
So, and considering the inflation and the kind of things happening,
Hmm.
definitely the cost of living that point of time would be high. So this will help you to for your survival.
Yeah.
Right.
Yeah.
So that is the reason it is mandatory that the withdrawals and there are restrictions on it. But considering the point, when we see that this is a fantastic product and the returns are also amazing in this, and the risk is also limited, plus government is promoting, why not let us have another option for the investors that wherein they can invest and reap benefits whenever they want.
Yeah.
So that is the reason the tier 2 account have come into the picture.
Yeah. So I have to put it in a very simple term. Tier 1 is your pure pension account,
right,
and tier 2 is an investment account.
Investment account,
yeah,
right. You can do your investments and withdraw as per your requirement.
Absolutely. Absolutely.
Great.
Yeah. So coming to the asset classes, so the contributions that the employees or the subscribers would be making into NPS, there are 4 asset classes where your contributions would be going in. The first is equities, the second is corporate bonds, the third is government bonds, and the fourth is alternative infrastructure. Again, these are the 4 asset classes that we have in NPS. There are 2 investment approaches that an employee can do into NPS. The first being auto choice. Auto choice is basically a automated life cycle fund wherein the investments into the account would be automatically going in according to the age of the subscriber. So this basically means the investments would happen according to the age. The investments in the asset classes would happen according to the age of the subscriber. If you can see in your screen, there are 3 red columns written over there: aggressive LC 75, moderate LC 50, and LC 25. So here what happens is, at the time of account opening, if a subscriber chooses auto choice as his investment approach, he has to do one choice, which is to choose his life cycle fund for his equity exposure. So for example, if a customer applies for aggressive LC 75, till 35 years of age, 75% of his investments would be in equities. The rest would be in corporate bonds and government securities. As the age increases, the subscriber's equity portfolio would decrease and his debt portfolio would increase. That is aggressive LC 75. Again, in moderate LC 50, till 35 years of age, 50% would be in equities, the rest would be in corporate bonds and government securities. And as the subscriber's age increases after 35, his equity proportion would decrease and his debt proportion would increase. In conservative LC 25, till the age of 35, 25% would be in equities and the rest would be in government securities and corporate bonds. That is auto choice. The funds in the asset classes would automatically get invested according to the age and the risk appetite of the customers, and the fund manager would be doing it. The second investment approach that we have is active choice. So active choice basically means the right or the right to choose in which asset class, how much proportion of your investment should be going in, lies on the hands of the customer. At the time of account opening, there are 4 asset classes that are involved in active choice. The customer has to decide as in which asset class, how much proportion of your investments should be going in. However, when it comes to equity and alternative infrastructure, there is a restriction. In equity, the maximum that you can invest is 75% of your total investments. In corporate bonds, government securities, there is no such restrictions. You can invest the entire 100% investments. But again, in alternative infrastructure, which is a new asset class that got added recently, here you can only invest up to 5%. So basically, active choice, the right lies with the subscriber to choose in which asset class, how much proportion of his investment should be going in. Or in auto choice, it depends upon the age of the customer. Now, the beautification here is, as a subscriber, you get to decide what is your investment approach. Either you want to go with active choice or auto choice. Again, in a financial year twice, you can also change your investment approaches from active to auto and from auto to active. It is not mandatory that at the time of account opening, if you choose active choice, it would remain active choice for the lifetime. You can change it looking at the performances of all the asset classes.
Right.
Yeah. Okay. So from the past 2 years, HDFC Securities as a POP, we have been winning the awards for the best corporate registration, for best POP registrations. In 2017, we have won the maximum number of corporate subscriber registration that we did in 2017 was highest by us. And in 2017, for the maximum individual subscribers, we won the second award. And in 2016, we were the best point of presence for the private sector employees, and again for the retail sector employees as well, we were the best point of presence. And in 2016, we also did the maximum number of corporate subscriber registrations.
Great.
Okay, these are the charges that are involved in NPS. So the first charge that is involved in NPS is the initial subscriber registration charge of 200. It's a one-time account opening charge that would be collected from the subscribers upfront at the time of account opening. It's a one-time charge that will be charged. Again, coming to the second point, any initial contribution or any contribution that the subscriber make towards NPS, 0.25 would be deducted as the POP charges, and the rest of the amount would be credited back into his NPS account. Okay, any non-financial transaction would be 20. So basically after the account opening, if there are any non-financial transaction that you do, basically it's your mobile number update, email ID update, so 20 rupees would be charged. If you do it from your online portal, from the portal that will be giving it to you, if you do it from there, there will be no charges. But if you contact your POP, then there would be charges. The first three charges would be collected upfront, and the rest of the charges, which are the account maintenance charges, which comes around to 200 to 250 rupees, it would be deducted from your NAV. So if you can see the PFM charges, it is as low as 0.01%, which is the lowest when it comes to any investment or retirement investment schemes that we have in the market.
Right. So this is also very important that investors should know what are the charges and how much what they are paying at a macro level. So the macro level, it is 0.01% is something which is appreciated. I mean to say, the least amount is going into the extra charges and maximum amount is being getting invested.
Absolutely.
And initial setup cost is definitely there, because I can understand there is involvement of PFRDA and other formalities are there.
Absolutely.
So that's really great. Fantastic. I mean to say, now the next question comes, how you can apply. So with HDFC Securities, you simply need to contact your relationship manager. Just contact your relationship manager or the branch manager, visit to any of the HDFC Securities branch which is nearest to you, and simply ask for application of NPS, and it will be well taken care of. Right?
Yeah.
So you can definitely do that. Now, friends, we are open for Q&A. Any specific questions that you have, please ask. We will be happy to answer them.
Yeah.
So let's see what questions we are getting. Okay, so this question we are getting from Mr. Muhammad Asif. He's asking, my father is NRI. Please give info also for NRI.
Yeah. So Asif, it's a very good question to start with. So according to the recent developments that NPS has been going through PFRDA, so we have got a confirmation that NRIs would not be eligible to open an NPS account. So only Indian citizens between 18 to 65 are eligible to open an NPS account. So what was happening was, previously NRIs were allowed to open an NPS account, but due to some payment restrictions, there was some difficulties when we were doing the withdrawals procedure. So for that reason, HDFC Securities has stopped opting for NRIs to open their NPS accounts.
Okay, Ms. Jaya Durga is asking, can we invest online through HDFC Securities? Well, Ms. Jaya, earlier that was there, but due to the recent update from the Aadhaar-based verification, so at present that online facility that we provide is, we have paused it because of the Supreme Court notice. So at present, online facility is not available, but we are working for an alternative, like how we can come up with online functionality. The work, we are already working on that. But yes, irrespective of that, you should not stop. Simply contact any of your relationship manager or visit any of your nearest HDFC Securities branch and ask for NPS. We will be there to help you.
Yeah, absolutely. Yeah.
Okay, so next question, a very interesting question we have from Miss Shri. Just a minute. So many questions we are receiving. Okay, so income tax implication.
Yeah.
I understand that now the amount received on maturity is not taxable.
Yeah.
Please guide.
Yeah, it's a very good question, and I would be glad to inform all our subscribers and all our customers that previously, according to the recent guidelines that the government of India has shared with us, from now onwards, the maturity on the withdrawal benefit that you get in NPS, it is completely tax free. So what happens was, so I would just explain in brief about the withdrawal part. So at withdrawal, which is at retirement, as a subscriber, you would be getting 60, you are eligible or you are allowed to take out 60% of their entire contribution that is there in NPS. So for example, if you have 10 lakhs as your NPS contribution and NPS corpus during your withdrawal, 60% of that were you were eligible to take it out of which 40 was tax free and 20 was taxable. But going forward, the entire 60% of your investments would be tax free. So if, for example, at the time of retirement, if you have 10 lakhs as your NPS corpus, and if you wish to withdraw 60% of that, so 6 lakh you can withdraw during your retirement, and the entire corpus would be given to you without any taxes being deducted. So that's a wonderful thing that the government of India has done, which is very beneficial for our subscribers as well.
So with this makes a product as exempt. So
Yeah.
amount invested exempted, the annuity returns that you get exempted, and even whatever the returns that you are taking at the withdrawal point of time, that is also has been exempted. Great. So next question we are getting from Mr. Maqsood Patel. He's saying, can I invest in ELSS, PF, etc. to extend of 1,50,000 and then an additional 0.5 lakh in NPS to avail the additional tax benefit? Exactly. Yes, sir. That is what it is, Mr. Maqsood. So you have to invest up to 1,50,000. You have already invested, you will get the benefit, right? But within the 1,50,000, if you add more 50,000 and make it 2 lakh, you won't get it. So that additional 50,000 has to go in NPS, and you will get the benefit of that.
Absolutely.
Great. So Mr. Mohammed is thanking us. Most welcome, sir. Thank you. Now I am 22. Which one should I select, tier 1 or tier 2? See, here you don't have an option to select tier 1 or tier 2. You only have an option to select tier 2. Tier 1 is mandatory. In order to open an NPS account, your first NPS account will open under tier 1 itself, which is a mandatory account. And the withdrawal is limited. You will be only able to withdraw at a certain age. You cannot withdraw at this point of time, right? Tier 2 is optional. If you feel that, yes, I should invest, NPS is a good product, it's a safe product, and I can decide my own choices, auto choice or active choice, whatever may be the requirement. If you like the product, you can take tier 2 account also and do investments in it and withdraw whenever you want. So that's totally your choice. Okay, and here we have the next question from Mr. Hari. Mr. Hari is asking, can you please explain the difference between two types in NPS?
Okay, Hari, there are two types of NPS accounts, tier 1 and tier 2. So as a subscriber, if you wish to enroll into NPS, your tier 1 accounts would get opened. Tier 2 is an add-on investment account that we give to the subscribers. Now I'll explain you the two major differences between the two accounts. So tier 1 is purely your pension account and tier 2 is your investment account, which is optional. So as I told earlier as well, the tax benefits that I explained in the previous slide, it is only attached with tier 1. So if you invest into NPS in tier 1 accounts, then only you're eligible for the 80 CCD 1B tax benefit that you get under NPS in a financial year. Tier 2, you can invest as much as you want to, but there are no tax benefits attached. However, another good thing about tier 2 is there are no withdrawal restrictions. In tier 2, you can invest anytime, you can withdraw anytime, there are no restrictions. But in tier 1, because it's a pension account, there are withdrawal restrictions which is capped till your retirement. Right. So that's the two major differences that we have in tier 1 and tier 2 accounts.
Shri Apartment and Mr. Maqsood Patel have been saying thank you. Most welcome, sir. And next question, we have Mr. Amit is asking how to invest in NPS. Simply visit to our HDFC Securities branch and they will guide you on that part. There is an offline process at this point of time. Online process, we are working on it. It was there earlier, but due to some changes which has been happened, we have kept the process on pause. So we are working on it to rectify that. Once it is done, it will be available online as well. And okay, so considering the time constraint, we'll take this last question that is been asked by Mr. Hussain. He's saying, I have a home loan too. So additional 50,000 NPS will give me extra tax benefit or not? Of course, yes. I mean to say, see, this is covered under 80 CCD 1B. So your home loan would have a different section. All the sections are there and every section have their specified tax exemption amount. So as per that, you can definitely get this. You are getting qualified under 80 CCD. Right? So Mr. Atul Gupta is asking, can individual business person invest in NPS?
Yeah, Atul, any Indian citizen who is between 18 to 65, irrespective is a business person, is a salaried person, is a senior citizen, anyone between 18 to 65, and if he's an Indian person, is eligible to open an NPS account.
Great. Okay. See, a couple of questions we have. We'll quickly take that.
Yeah.
First question we are getting from Mr. Mohammad Asif. He's saying, thanks. Not yet employed, still looking for opening. Can I open now? I am holding an HDFC resident account. Right now, I am out of country. Well, Mr. Asif, at present, if you are not in India, that is okay. Right, but if you are a resident Indian, you might have gone there for some personal work and then you will come back again. You can definitely do that if you're holding the account and you are, as you have mentioned earlier, you are at the age of 22. Definitely you can open the account. Just visit, you have a savings account. You can go to bank and ask for demat and trading account, or you can simply go to visit any of the HDFC Securities branch. Or best thing is that I'll give you one link. You just have to go to our website, click on mobile application. There you will find on the bottom get started link. Enter your mobile number. You will get a link which is https://getstarted.hdfcsec.com. If you just open this link, it will guide you your complete onboarding journey, and it will also help you to open your demat and trading account, because you already have savings account. So it will not take a lot of time to get your account open. You can open your account. Yeah. All right. So Mr. Lakshmipad is asking, to get additional 50K benefit, do I have to invest 2 lakh rupees?
No.
I guess what we are discussing is the amount of 50K which you will invest will get exempted from your taxable income.
Yeah.
So like your, say for example, if your taxable income after all other deduction comes to 6,50,000. Now in this scenario, you will pay tax on 6,50,000. But if you have shown investment of NPS, you have invested every month, say for example, every year you have invested 50,000 rupees in NPS, then you can claim that and it will get exempted, and now your taxable income will become 6 lakhs.
Absolutely.
So the tax benefit which you will get, that depends upon the tax bracket which you are.
Yeah.
So earlier it was 10, 20, 30, now it is 5, 20 and 30. So depending upon your tax bracket where you are, accordingly to that, you will be saving your income tax.
Absolutely.
Right.
Yeah.
So thank you so much, Mr. Mohammad Asif is again saying thank you so much for the valuable information. Most welcome, sir. Mr. Atul Gupta is saying thanks. Most welcome, sir. So I hope that this session was really helpful for all of you, and we are looking forward to come up with more such sessions and some interesting topics which can upgrade your knowledge levels. We have our dedicated YouTube channel. We have done a lot of interesting topics out there. I request all our subscribers who are watching right now, go to YouTube and type in HDFC Securities, subscribe to our channel and press the bell icon. Go to playlist of webinars. There you can see all the various webinars that we have been doing in the recent past, and you can upgrade your knowledge levels. Right. So thank you so much for joining in. Thank you, Dheeraj.
Thank you.
And I wish you all have a great day. Please stay updated on our website page of webinars. That's upcoming webinars. We have interesting things lined up every week, every Saturday, every Friday, Saturday. The calendar gets updated. Check that out, register and be there. See you soon. Thank you.
Thank you.